Hello, ladies and gentlemen. Welcome to the newest edition of Levalytics on Video. I am your host, Jordan. Some of you may know me as Permable Nino if you're from the Twitter realm. I'd like to welcome you to the channel and let everybody know that, there's big news this week that Levalytics became a free newsletter. So that means moving forward, all these videos will also be free and not limited to only paid subscribers. We're pretty excited about the transition, and to tell you the truth, we're just really excited to get the content in front of people. So, moving forward, we're pretty new. I'm pretty new to video, but every single article will always be paired with a video, and I'm looking forward to getting into it. And you know what? Without further ado, let's just get into the charts. So, the theme for this article today was talking about how we're near the end of the tunnel and what we believe this bear trend has been, right? It's been a very long bear trend. It's been basically down only. If you look back to basically the U.S. presidential election, that's effectively when the bear market started. And we kick things off in the article by talking about this chart here, which shows the percentage of perp pairs on Bybit that have less than $5 million in daily volume. And the general trend about volume that you need to know about as an analyst or as a trader in the crypto markets or in any market in general is that volume is very indicative of the level of interest that people have in speculating, owning, trading anything, any sort of asset or asset class. So by looking at the level of activity that is taking place across all perp pairs on Bybit, we can get a decent idea of what the level of interest is in crypto today, what it's been in the past, and maybe when it peaked out, right? So let's just get into it. So anytime you see large spikes downwards in the percentage of perp pairs with less than $5 million in daily volume, what that signals to us is that a lot of trading is taking place, right? Because that means more and more assets are moving above the $5 million daily mark in volume traded. So one example here that we had was in late 2023, right after the Bitcoin ETF got approved. You saw a spike at, going into the Bitcoin ETF approval, you only had 71% of pairs trading with more than $5 million of daily volume, and it topped out at 23% in March of 2024. And, this is the trend overall. After this period, right, it topped there and it bottoms all the way in September of 2024 at 80%, right? And then before that, then right from there, it takes off all the way down back to 27% after the presidential election. And then ever since then, this is what we've been talking about a lot in the article, though, which takes us to where we are today in this bear market. You ask yourself, when did the bear market start? There's a lot of different ways you can look at it. Some people would say, October 10th, 2025. However, there's been a lot of signals that we've talked about. We actually even talked about this in the article last week, that there are a lot of signals that there was just not market-wide participation nor any level of equitable recovery across the altcoin space, even though Bitcoin made new highs later in 2025. So after the election, it was over. That was actually the blow off top. You look back on it with a bunch of different data points, and this is one of them, right? So you see in the November 26th of 2024, this bottomed at 27% of pairs, right? Which means that a lot of perp pairs were trading with a lot of volume after the election, right? For 2 or 3 weeks, which, it was basically, if you look at the leverage in the system back then, which we have a leverage chart related to perps later on, you'll see that everyone levered the fuck up going into the election, and it shows in the data and it shows how we topped. But ever since then, look at this. It bottoms at 27, and it's just been a bleed out since then. Even when Bitcoin made new highs in summer, fall of 2025, this is just still bleeding out. That means altcoins just had zero recovery. Nobody cared to keep trading them. Volumes were anemic. People were exiting the casino. Either people just got completely wiped out on the pullback or the top that occurred here, right, after the election, or just people cashed out. It's one or the other, basically. It's probably a little bit of both. But yeah, it's been just nonstop bleeding, right? And this is actually the worst this value has ever been. You can see it going across the chart that in Bybit's history, the perps market has never been this unhealthy in terms of like volume traded across like all of their different perpetual swap pairs. And keep in mind that this data is for Bybit perpetual swaps, right? So this is probably counting over 500 pairs. So there's a great deal of data that's going into this chart. So, it's always, I'm a former auditor in another life, and you always want to make sure you have a representative sample size of what's going on in the market. And, with 500 plus players, you can be confident that this really covers what's paints a fair, honest picture of what's been going on in the perp markets in crypto and particularly on Bybit. And yeah, so we'll move on to the next chart because, we're talking about like leverage in the system and all these different things. This is on exchange, so it's all off chain action right here, right? So let's move into Aave v3, and we're going to look at the three largest pools where money has been borrowed on Aave. And naturally, you can guess the three assets that are borrowed the most on Aave v3. It's WETH, USDT, and USDC. And you can see all these things topped in summer, late summer, early fall of 2025. WETH is the largest value. WETH is the orange line, USDT is the purple line, and then USDC is the green line. And you can all see they pretty much all topped at the same time, right? So some of this is a function of price action too with WETH, right? But you can see also though the behavior is pretty similar also with the stablecoin pairs too. So the market was just as levered up as it's been, back at this point in time. But however, if you looked at this metric, you would say, oh, the bear market started in August of 2025, right? So there's a lot of different ways to pin this and put the date on like when all of this action started. I still would stick to the idea that it started after the presidential election and that all of 2025 was a bear market. And, we're 3 months into 2026. We're probably 15 months deep into at least an altcoin bear market. And Bitcoin, maybe not. But yeah, it's kind of actually the similar vibes. If you look at this price action up here, right, like for the presidential election up here, all the way to the new highs that printed in 2025, it kind of was like that same market structure we had in 2021 and going into 2022 bear market, where you got a bounce, you even got like a small extra little high, and then it just all rugged from there. So it's a very similar construction, and I actually think the behavior in the market was somewhat comparable in that regard. That even though we got a bounce, the market rugged after the Coinbase IPO in 2021, but it rugged after that it bounced again, but it didn't really have that same level of like euphoria and fervor and excitement about owning crypto at that point in time. It was just kind of like dead. It had a very dead catty vibe, even though there were some like decent pumps here and there in crypto. But yeah, you can basically see though that like all the borrowing that's been taking place in Aave v3 has just been rinsed. All of these values are down at least 50% from the highs. And if you look back, you want to trace it back to like, I sometimes like to look at these metrics and be like, when was the last time that this value was this low? And basically across the board, it shoots us back to, I don't know, July, maybe. Yeah, July, mid 2025. So we've rinsed like 9 months of leverage in the system. So yeah, I mean, and the reason why we look at this type of metric, it's not to be, oh, this is pinpoint bottom. This isn't one of those metrics that it's, a yes or no. This is kind of to build context as we story tell to ourselves what is the current state of the market, right? And what this really tells us is that the market's been rinsed. This is this is one of the worst drawdowns we've had in a while in terms of leverage and people getting wiped out of the system. Because what ends up happening in crypto bear markets is not only altcoin values go down, not altcoin values, altcoin prices or Bitcoin price goes down. The leverage always just gets wiped out of the system. It's almost like a complete baptism, a complete wipe of the board. And that's effectively what we've seen here in the Aave v3 lending data. And so let's move on to the next chart. This chart shows the average altcoin open interest on Bybit, but if you denominate it in Bitcoin. And you can see, hold on one second, let me fix this chart a little bit for people so you can get a better view of what's actually going on. So basically, since the bottom in late 2022, early 2023 in crypto, right, the Bybit altcoin OI historically would top when the average altcoin perp pair had around like 350, a little above 300 BTC worth of value sitting in open interest, right? You would see it top the market after, this April 2023 was like just like the beginning of like a huge quiet period in crypto leading up to the Bitcoin ETF, right? And then, you got another pop up here. This was a deleveraging event that took place right around the ETF time. And then this was the ultimate top of like that monster run. We talked about this in the last video, that this run up from the Bitcoin ETF where you got one pump, a deleveraging event, sideways and down, and then another big old pump right there to top the market out before it went sideways for what, I don't know. This happened in March, so 7 to 8 months. And then, you also got one more pump above the 350 BTC level after the presidential election. And what's really crazy, though, that we talked about this in the article as well, is that, after this, the market was levered. Remember, we also actually, even earlier on in this video, we talked about how levered up the market was after the election. I mean, look at this. This is the largest this value has ever printed. And lo and behold, right after this occurred, the market just completely delevered. And within, I don't know, this is December 2024, by February 2025, 2 to 3 months, the altcoin casino had been completely obliterated. And, keep in mind, it never recovered from then. This is like more evidence to point to the fact that this was the blow off top. The blow off top was the election, and effectively we have been in a bear market ever since then. Like, look at this. The altcoin OI values, if you denominate in Bitcoin, just never recovered. For a long time, we never even got down to these low levels, right? Sub 150, sub 150 Bitcoin sitting in perpetual swaps OI, it just wasn't a thing. And, after the election, we just couldn't even get out of it, right? We sat around this 100 to 200 BTC level, and then we rugged one more time on October 10th, and that shot things down from 173 BTC down to sub 100. And yeah, I mean, it's just more and more evidence just showing that this market is completely rinsed, and it's basically been rinsed since the presidential election, or ever since Trump took office as president of the United States. And, this October 10th drawdown and everything that's occurred since has basically just been the cherry on top of what's been an endless onslaught of leverage destroyed basically in the system. Now, this chart we've talked about a lot in the previous articles, and if you were not a paid subscriber leading into today, which, like I said, this is now free research for everybody to look at, this shows the consecutive days in a row that the average altcoin return is less than zero over a 90-day span. And so this shows you how many days in a row 90-day returns have been negative for altcoins. And this is the largest value that this is printed for the entire 5-year history that this Bybit data goes back to. And we are currently on day 179 in a row of negative 90-day returns for altcoins. It's disgusting. It's a endless downtrend, and there's been no relief. And this is another thing that we also talked about in the article, is that the tracking time and the duration of a trend is extremely helpful, because sometimes you just want to know, am I early or late? Are we how long has this been going on? How does this compare to historical drawdowns? If you look back at the 2022 bear market, for example, it was a pretty brutal year, to tell you the truth. This is when they were hiking rates, and it was a brutal downtrend, but there were points where it at least paused and stopped for a while, right? You would get little small breaks in the action, right? So the deepest print you ever got was 108 days in a row, basically, for the extension or duration of downtrending price action, right? Whereas this time around, you get double that, and it's just been nonstop. So, to some extent, you can consider it just speed running a bear market. If you want to just be like, okay, let's just rinse everything out of the system as fast as humanly possible. That's kind of what we've gotten here. And, a lot of people will say 6 months is not fast. But, in terms of crypto bear markets, you can get even longer periods. You go back to 2018, that was forever. And it was just endless. So, this is, all things considered, you're kind of ripping the Band-Aid off here. And yeah, so what's most important, though, like we talked about, that is we believe that we are near the end of a bear trend here. And at a minimum, it's very obvious that it's very late. So that's one thing you need to keep in mind. If you're panicking and oh, I need to puke these assets, unless you have a bill you have to pay today, I don't think there's any reason to start puking now, right? We're 180 days, which is 6 months into a downtrend, of down only though. And, eventually, there's going to be mean reversion. So that's not kind of something that we're gearing up and we teed up in the rest of the article. So now this is what, when you're deep into a downtrend, the biggest question you ask yourself, okay, it's already late, right? So the next question you need to ask yourself is there another shoe to drop? Is there anything that could really push the price lower? And the most obvious thing that we've been talking about is that this conflict in the Middle East, right? Everything that's been going on with Iran and the Strait of Hormuz and oil prices and equities and everything, right? So this blue line shows the SPY chart, and the green line at the bottom shows the percentage of pairs that have broken to new 90-day lows. So what the reason why we presented this chart within the article is that every time you get large spikes, like a large percentage of pairs breaking to new 90-day lows, the price is usually the equities markets tend to bottom within a couple weeks of that, a couple weeks to a month. So you can see you get a bottom here. You're pretty close to a bottom here when all this is taking place. This is October 2023. It's the end of October, right? So all these are bounces. The question is sometimes you can get a bounce. Like, for example, at the end of 2024, you got some bounces, right? Bounce here, but then it rolled over and it dumped in a huge way. But I think part of that has to do with the fact that I think a lot of people were kind of caught off guard by these tariffs that Trump kicked in. But let's keep looking. Hold on one second. Anytime you get 20% of pairs breaking to new lows, and keep in mind that when I say 20%, this is across a little over 200 equities that I track. And so here's another bounce, right? We got another bounce in late November around Thanksgiving time, and then here's one right now. So this value printed 21% on March 27th. So, we might have a couple weeks of chopping around, and there's a decent opportunity for the equities market to put a bottom in, right? And, after crypto's been down so bad, frankly, in the middle of all this crazy action that's been going on in the Middle East and what's been going on in equities markets, you're kind of like, you're kind of thinking, oh, crypto has actually behaved pretty decently well. This is something constructive. This is what you like to see. And I'm just going to say right now that we're not out of the woods. So you still need to be paranoid. There could be another shoe to drop that just pushes this thing lower, and then Bitcoin and altcoins get pressure applied to them. But for right now, it looks really good, right? And the biggest thing is, if the pressure gets let off on equities markets and crypto didn't dump to new lows in the thick of all this, I think that is the most obvious catalyst to push crypto prices higher and to bottom the market, because that's pretty clear at that point. It's like, okay, we're into a disgustingly deep downtrend. Leverage has been completely wiped out of the system. We had a catalyst that really should have sent prices lower if people were thinking, oh, what do I hate the most? What do I want to own the least of? Crypto, right? If in an event like that, people aren't panicking about it anymore, it's a pretty decent sign. It's like, oh, there's some underlying strength in the market here. So this is, in terms of timing, right? This is what we're focused on here, right? We already know it's been a long downtrend. We're just trying to figure out how soon is the bottom going to kick in. And this is a decent signal. Like I've said, it usually takes a couple weeks for the equities markets to bottom. So I think you need to give it a little bit of time, because it's only been, 10 to 14 days since this value printed. But there are signs of life here, right? You want to see that the end is possibly near. So this chart gives us a decent idea or gauge of what is actually going on under the hood, and when could we possibly expect some sort of rebound to take place in crypto, assuming that equities actually bottom soon. So yeah, that covers that. Okay, so this chart requires a little bit more nuance to explain, but I'm going to keep it really simple though for people that are watching. I'm not going to get too technical about this, but basically these green dots show areas where perpetual swap traders are holding onto their positions, and they're not panicking and opening and closing their positions very quickly. And effectively what's been going on with this metric since the ETF pump, it's been very reliable in letting us know if the market's about to pump or dump. It doesn't tell you which way it goes though, right? It tells you all it tells you is that perpetual swaps traders are willing to hold on to their positions, right? And usually when a lot of people are willing to hold on to their positions, the market rugs and you get a bunch of long liquidations, or people realize, okay, there's not that many sellers and the market just starts to lift, right? So, you got this in post ETF pump, and then here's second ETF pump. But here's an example of the market when it was going sideways in 2024 leading into the presidential election, where you just got, mean reverting top, rug it. Here's another one, mean reverting top, rug it. And then going into the election, September 2024, you started getting some green prints. And it takes us all the way through the presidential election pump. And then after that, you got like a little run up, boom, you rug it again though. So, over time, it just shows you, people's willingness to hold. And if people are willing to hold, it's either a really good or a really bad sign. And as it relates to today, we're starting to get signs of life. A lot of green dots are printing, and this metric at the this bottom subplot is what the actual metric is, right? So high values signal that that traders are willing to hold on to their positions, and we're getting consistently high values, and this has been the case since mid-March. So we're like honestly kind of coming up on like a month of traders being willing to hold on to their perps positioning. So there is a decent chance that action is on the horizon. So that's something to pay attention to, and that always gets my attention. So whenever I look at this metric, which it's on the Dude Terminal website, which we're going to look at after this, it does a very good job of letting you know, like, okay, there's something afoot. Time to start paying attention. Okay, so this chart shows us the difference between the interest in the ETFs versus market caps. And what I mean by this is that the green line shows us the cumulative ETF flows into Ethereum versus Bitcoin, which I mean literally divide them by each other, right? And then the ETH market cap versus the BTC market cap, which is the orange line. And then the black line is just the ETH BTC price. So what we're seeing in here is that the interest in the ETH ETF is relatively higher than the market cap of ETH versus Bitcoin. So that could be a decent signal to us that we're watching that there is some extra interest in ETH that is not being reflected in the market cap or price. So that is something to watch for in the coming weeks. And, we've been pretty excited about, we talked about this in the previous recording, that, we're pretty excited about Ethereum, and we think that there's a possibility for ETH outperformance. And, the reason why we even care more about that is that altcoins move way harder when ETH is strong versus, Solana, for example. And, it is the ultimate barometer for what the risk appetite of the crypto markets are. And so this is something to watch for in the coming weeks. And we think that this is possibly a bullish signal that there is some unspoken for demand for ETH right now. That doesn't mean you're taking some sort of fundamental stance of ETH versus BTC, right? We're talking trading here. We're talking about swings and price action. So this is something that we're watching for in the coming weeks. And, this has basically been the case since September, since basically ETH BTC started like just underperforming a little bit, right? So since September of 2025, this has been the case. So yeah, just something to gauge and watch moving forward. And we're pulling a metric from our article last week, which shows the percentage of assets that have traded sideways over the past 90 days on Bybit. And like I said, this has over 500 plus pairs going into these calculations. So it is a large body of assets that is going into this breadth calculation. And the number one thing is, we're just constantly trying to figure out timing. Like we said, the point of this article was to discuss, okay, things have been bleak. It's been going on for a long time. Let's talk timing if we think that this market's going to bottom soon. And in our opinion is that we're 2 to 6 weeks possibly out from that occurring. And the most important thing that we want to see happen to really settle what's been going on in this range since early February is we want to see a large charged up sideways value, right? Because you see like all these other times before large moves took place, you at least got close to like an 85% plus print, 85 to 90%, right? You would get a large print here. What is this, 89.94% before the market pumped going into the presidential election. Even just this mean reverting dump that occurred in May of 2024. This was a 90% plus print. And, right now we're kind of, we topped out at like 79% and we're back at 65%. So we want to see a little bit more of charge up in this market. And we're not sure when it's going to occur, but we think it could take another 2 to 6 weeks, like we said. And when that value occurs, that'll be a good time to start placing bets whichever direction prices start breaking. So this is another thing to watch for. Now on to the portfolio section. There's not much that's changed here. We're 26% long. The market still is kind of in a sideways state. It's kind of self-explanatory at this point why the Leveletics book is only 26% long. Not trying to overtrade a choppy market. The only things that I will note is that I'm particularly bullish AI. It's one of the few sectors that has actually consistently outperformed Bitcoin in the past couple of years as an entire sector on a risk-adjusted basis. And then the other thing is that Zcash has been added to the book as well. And the reason Zcash has been added is because its price action is just god tier, and it's kind of trading like old school 2017 crypto. And here's an example of how you could look at this. I mean, look at this. This thing is up only through the fall of 2025, and this is sideways price action. This doesn't look like something that's dying. And I think there are very few assets in crypto, and it happens once in a blue moon, where you get something that is liquid and just trades so strong. This is kind of like Solana type vibes of, how easy it is to own it and becoming one of those low effort trades. Normally I say buy blue, sell red, but bought a small little bag for the Levelytics book here, and we'll add more as the market starts to reveal and show its strength. So now we're on to the weekly portfolio returns. The main reason that this chart is used in this article was just because it's just to show what we want to avoid. And this minus 15% basically week in October 2025 was brutal. And, keep in mind, the book is only down, the book is down minus 31%, which we'll talk about in the next chart, down minus 31%, and 15% of it came from a single week. So the main point of sharing this chart is that in the meantime, while the market is not trading the way we quite would like it yet, even though there are signs to get you excited, there is no reason to jump the gun and potentially put yourself at risk for a gigantic candle going against you when it just goes against your general strategy. Like basically, I think the easiest signal is that the most of the portfolio that I'm willing to bet that goes effectively against the core strategy of the portfolio is 26% of the book right now. And, so just don't get blown out, because these big down weeks, they kill your portfolio. Recovering is such a pain in the ass. And then with that in mind, this purple line up here shows you the percentage that the Levelytics book needs to make to get back to break even. It's 46%. That's it's a gigantic amount in other markets, but in crypto, on a statistical basis, it's basically just one really good month in crypto. I can show you. Hold on. Let's go look at Dude Terminal really quick, which is also free and available to the public these days, just so you know. Okay, so look at this current value snapshot and look at the 1 month average return. So a top 10% month for altcoins is 32% and higher. Okay, so you can make this back in a month. So that's something to keep in mind. You just always want to be within striking distance to kind of get back to that break-even point at a minimum, right? Obviously, you just want to be in profit and comfortably in profit and not give back your gains. But this is something to keep in mind as you are working through your own portfolio strategy and how you want to trade the crypto markets. So, with that, we're down 31. Bitcoin is down 42%, and altcoins are down 62% since Levelytics launched. And of course, like we mentioned before in the last video, Levelytics launched on October 1st, basically the Pico of Pico tops. There was 10 days before the market rugged. 9 days, I guess, if you want to be very, very specific about it. So that is effectively the article. So now I want to take you through Dude Terminal to look at a few things that did not make the article, because there's only so much you can provide in these things, and I don't want to get repetitive, and there's no point in actually adding the chart and going through the writing process if it's just not really on theme with the article. But in previous weeks, we actually de-risked the book a bit because we had this large discount. Hold on a second, fix this. This is the Bitcoin price chart. This is the altcoins, the median altcoin Coinbase discount or premium. And, from the end of March, you basically started trading at a not super steep, but like a discount. So that was a reason to get nervous. I think that's when people thought that things were starting to accelerate a bit with the Iran war. And we're kind of just back to flat now. There's really no Coinbase discount or premium at this point. So the market has actually settled out a bit, which I think is a good sign. It doesn't really mean a whole lot more than that for right now, but it's just something to pay attention to. I'm trying to think if there's anything else in here that I could share with you guys. I honestly am way overdue adding a bunch of these charts to, all these charts that I have in these articles. I have like a huge backlog of charts I need to add to Dude Terminal. But yeah, let's just look at funding rates. So yeah, 18% of pairs are trading with negative funding on Bybit, which is like pretty low. You know, it's been pretty elevated in the 30s recently. Here it is. Here's the chart. So we got a big move down. So this means people are getting long or spot is weakening. I'm starting to think that maybe people are getting a bit longer than they were before. You know, there's like peak bearishness down here with all these red dots where you're starting to get these large percentage of perp pairs with negative prints, which we're getting into the high 30% range. But yeah, so that's that. And can leave that dude terminal. You know, like I said, dude terminal is free and available for everyone. You don't even need to make an account anymore. And then otherwise, let's just show you the ETH BTC chart because it's really just as simple as this. This is the strategy moving forward. Buy blue, long blue, sell red. Keeping it that simple. And a daily close above 0.035, I don't even think you hesitate. Not that this is financial advice, obviously, but I don't even think I'm not hesitating. Let me put it to you that way. Not going to hesitate, get super fucking long, take the risk. You know, that's an opportunity where you're like, okay, is this worth the squeeze? Definitely. You know, at this level when you're kind of trading in no man's land, not much going on here. And like I said, ETH BTC is kind of one of those high signal asset or high signal pairs that lets you know what the current state of the crypto markets are. So, yeah, so it's just kind of a waiting game for right now. But like we said throughout the article, throughout the video, that, you know, I think we're near the end of the tunnel. It's just a matter of being patient here. It is very clear we are late trend on this downtrend. And there are, you know, like we said, there are arguments, despite the fact that it's been 6 months of down only, which takes us back to October, there's a lot of evidence that the bear market for altcoins started in January, February of 2025. So we are possibly like 15 months into a bear market at this point. And for now, I'm just going to leave it at that. I appreciate the time and effort you guys put into listening to this video. If you guys have any comments, concerns, shoot me a message on YouTube or on Levellytics or on Twitter. Yeah, appreciate it, guys. Have a great day.